Good morning, everyone, and welcome to today's webinar covering the topic of online fraud. My name is Lucy Quick, and I'm the Digital Marketing Manager here at InfoTrack, and I'm delighted to be joined by Lindsay Petzer, Key Relationship Manager at Lawyer Checker. Good morning to you, Lindsay.
Good morning, everybody. Thanks for joining us today.
Thank you, Lindsay. Lindsay will be reviewing the key updates for fraud prevention and give you the tools to evaluate your current processes and spot any weaknesses early on. So before we begin the webinar, I would like to draw your attention to the Q&A tab, which is located at the bottom of your screen. We will be running a Q&A at the end of this session. So please type any questions you might have for Lindsay, along with your name, into the Q&A box. That way, if we run out of time or your question requires further clarification, we can then extract your information and follow up with you directly after the webinar. That's all from me for now. I will now hand you over to Lindsay. Thank you very much.
Oh, thanks, Lucy. Thanks for inviting me to join you on the webinar today. I'm really pleased to be here. So as an introduction to Lawyer Checker, we were founded in 2011 to help law firms mitigate the risk of fraud and cybercrime, with a particular emphasis on your fund transfers. We're also recognised by both the SRA and the CLC as a valuable tool to law firms to help you ensure that you're carrying out thorough due diligence on third-party firms. Created by a solicitor who understood the threat from fraudsters, he wanted to find a solution, and I'm really pleased to present to you our law firm verification service that's used in just under 1 in 4 residential transactions in England and Wales. So the last year has been tough for firms, the turmoil of the pandemic, the uncertainty of lockdown restrictions, and the increased workload as we led to the end of stamp duty. They've all taken centre stage. But during this period, many firms have faced another threat, increasingly sophisticated cyber attacks. So as we receive real-time data with the SRA, we've witnessed a 113% rise in fraud alerts when you compare March 2020 to March 2021. 89% of all 2020 alerts impersonated real firms, and 22% related to fraudulent websites. So the back end of last year and the beginning of this year, we saw quite an increase in website cloning. And then there's 55% related to fraudulent email activity. When you move to the beginning of this year, so between January and May this year, 57% of all SRA alerts issued related to email fraud or phishing attempts. This is often where sophisticated fraudsters impersonate a real law firm, usually through phishing emails, attempting to divert property transaction funds into their own accounts. The good news is that by taking a proactive approach, there's much you can and should do to ensure that your firm doesn't fall prey to cyber criminals. So just an overview on account and entity screen. So it provides you with enhanced risk management in fund transmissions by checking the account details that you're sending funds to against our unique database. Lawyer Checker's database determines whether the account you searched against has a track record of successful usage within conveyancing. We are robustly market tested. Back in October last year, we completed our millionth search. We're used on around 20% of all residential property transactions in England and Wales. You receive time-efficient results, and I'll come on to how the results are returned to you further in the webinar. And we've witnessed, many mergers, acquisitions, unfortunately law firms ceasing trading, and also new law firms appearing. So we do identify that new or dormant firms as a higher risk. and we manage legitimate changes of banks by legitimate firms. Account and entity screen protects firms every day to ensure that client funds are being transferred to a legitimate bank account. An example of our service in action is where account and entity screen saved £375,000 of client funds being lost to criminals. Here, fraudsters sent info via an email, which included bank details different to the ones the firms had used previously. They therefore used account and entity screen, and this produced an unknown response, meaning that we'd never seen those bank details linked to that firm previously. Because of this, as advised by us, they spoke to the other firm and realised that the details were in fact incorrect. And the firm was so worried when reflecting how easy it could be to have sent the funds to a fraudster. So the advantages of using account and entity screen is that it ultimately mitigates stress and identifies potential issues with a recipient account. It also mitigates a risk of typos. We are only human at the end of the day. And you could save thousands with a minor client disbursement. The majority of firms that use account and entity screen do charge the cost back to the client as a disbursement. So it is actually a cost neutral service to the firm. You're also reassuring your client and offering peace of mind that their money is being transferred to a bona fide conveyancer, and ultimately preventing internal stresses. If something did go wrong, your firm's brand and reputation could be at risk as well. So you're also protecting your firm's brand and reputation. So when to do an account and entity screen search. So we recommend as best practice that as early on in the transaction as you possibly can to initiate the check. That ultimately makes sure that your fee earners are not working on anything that potentially could be fraudulent. And it also highlights any risks or anything that you may need to consider that may delay completion further down the line. Now, when you're ready to complete, you are able to log back on and conduct a second free search before transferring the funds. What this will do is it'll run everything through the system again to ensure that nothing's changed from when you originally did the check. We brought this second check in as we identified that weeks and months could pass from when you originally received the firm's details and bank details. So this extra layer of protection is there just before you complete, just to ensure that nothing's changed. So ultimately, you've been receiving 2 reports on file. You've got a layered approach, and you're able to evidence your due diligence. So to initiate a check, this is the information that you would need to enter into the InfoTrack portal. So you'd need the matter reference number, and then the firm's name, their address, and their bank details. We also ask for their SRA and CLC number. We also ask for a proposed completion date. And the reason that we ask for this is, say, for example, you were to initiate a check today, and the proposed completion date is the middle of December. If something happens, if something changed, relating to the firm, so maybe there's a scam alert or bad publicity that you would need to be aware of, our operations team will pull through every firm that is searched against that particular firm and let you know of that risk and the change. So once you've initiated the check, you'll receive an instant report that will either come back as frequent, infrequent, or unknown. So the first test is the track record test. So we verify whether we've seen the named firm in previous searches utilising the sort code and account number. We look at how often that firm is searched against, historic data, and by how many other firms. So frequent is the best case scenario, and it means that the firm has a good track record with us and they're regularly subjected to searches. Infrequent means that we have seen those bank details before, not on a regular basis, and for whatever reason the firm hasn't checked all of hasn't passed all of the AES checks. And then lastly, the unknown, which ultimately means that we've never seen those bank details linked to that firm ever before. Test 2 is important risks, and this is referred to as a notice test. And notices can appear on frequent, infrequent, and unknown. So what we're looking for here is the solvency of the company. So as well as having real-time data with the SRA, we also have integration with CreditSafe to check the trading status of the firm. We look at has the firm had any interventions, any scam alerts associated with the firm, or any solicitors practice in there. Have they had any disciplinaries against staff, any bad publicity, or have we received letters from the firm about a bank account change? So just to go over the different ways in which the report can be returned to you. So frequent, it means that the firm has a good track record with us and we're not aware of any other relevant information. You could receive a frequent with a notice. So it's past the account track record test, but we are aware of important risk indicators that you need to consider. The result can come back as infrequent, which means that the firm has failed the account track record test. We have seen the sort code and account number linked to this firm previously, but not on a regular basis. Then you have infrequent with a notice. Again, they've failed the track record test. We have seen those details previously, and also we're aware of important risk indicators that you would need to consider. And then lastly, the unknown. So that means that we've never seen those account details linked to the firm previously. So if any of the bottom results are returned to you, our operations team will then receive a notification and we will conduct a further research report and provide that information to you. So the further research report, our SLA states that you will receive that further information within 4 working hours. However, at the moment, we're averaging just over an hour to pass that information across to you. So I'll just highlight a few of the different ways in which our operations team will manually check the firm. So they'll have a look at the SRA or the CLC data to confirm the practice ID, the address, and if there are any SRA conditions. They'll have a look at the land registry figures from the previous year and provide those. They'll have a look at the sort code that was provided. One, to see whether that sort code exists, and also in what proximity is it to the law firm that you're working with. So for example, if you were working with a law firm in Leicester that didn't have any other branches, and the sort code originated to a bank in Scotland, that potentially could be a red flag. As I mentioned earlier, we did see an increase in website cloning at the back end of last year and the beginning of this year. So our operations team will have a look at the website for existence, whether it has the regulator's badge, and whether they can spot any inconsistencies on that website. And another avenue that they'll go down is they will have a look on Google Street View for an appropriate building with the firm's signage or logo. So as I mentioned, that will be included in the results that you will receive in the further research report. And I've just got a few different examples of the reports that you would receive. So on the left-hand side, you'll see that that is a frequent result with a notice. So at the top, you'll see the information that was entered to conduct the check. And then you'll see that it's come back as a frequent response and an explanation of the reason that it has come back as frequent. So we recognise the account as an account used by other conveyancers in the past. It's been known for some time, and we have records of searches from numerous conveyancers searching against that firm with those bank details. However, we have spotted that there is a risk that you need to consider, and that will be under the notice section. And then underneath that, you'll have the last 5 times in which the firm has been searched against. So for the frequent, you wouldn't receive a further research report. The middle example is an example of an infrequent report. So again, you'll have the information at the top, what you entered to initiate the check. And you'll have an explanation of the reason why it has come back as infrequent. So in this example, the database recognises the account number and the sort code. But according to the information on our database, the bank account has been used infrequently by other conveyancers, or it's pretty new and they're just building up a track record. You'll then see the last 5 times in which the firm has been searched against. And underneath is an example of the further research report. And then lastly, an example of an unknown. So you'll see the information again that you entered to initiate a check, and an explanation of the reason that it has come back as unknown. So it means that we've never seen those account details linked to that firm previously. Obviously, with an unknown report, you wouldn't have the last 5 times in which the firm has been searched against, because this is the very first time that we've seen these bank details and that they get searched against for this firm. And an example of the further research report underneath. And then lastly, I just really want to talk about why should you use account and entity screen on every purchase transaction. So ultimately, you're safeguarding your client's money and assets. By using account and entity screen as a blanket policy, you're creating a risk-averse culture, and you're able to sell your compliance story to your insurer and your regulator, as you do have documented proof of your process. And as a trustee of the client money you hold, wouldn't you rather be able to prove you acted reasonably and in the best interests of the clients? You need to consider, why would you take a risk on some clients' money and not others if you were to use this service on an ad hoc basis? And then ultimately as well, if something went wrong with one of the transactions that you didn't conduct an account and entity screen purchase on, how would you explain this decision to your regulator and your insurer? And then I just want to give you a case study to back that up. So last year, one of our clients who used Lawyer Checker infrequently got caught out by not using the service in every transaction. They felt that they knew the firm well and therefore decided that they didn't need to carry out the appropriate due diligence. Having already sent the client money to the firm, they then found out that only a week before, the firm had had an SRA intervention where the solicitor had been struck off and the firm closed. We then received a call from a very distressed firm who asked the question, if they would have conducted an account and entity screen check, would this have been flagged? And the answer would have been yes, as we have real-time data with the SRA. And they then had to deal with trying to get their clients' money back. And this is a perfect example of a firm that are now using this service as a blanket policy in every transaction. Does anybody have any questions?
Thank you very much, Lindsay. I'll just have a look at the Q&A tab. Right, so we've had a few questions come through. Banks now check names against account numbers for CHAPS payments. Why do we need an additional search with Lawyer Checker?
I think it's more of a rounded, kind of understanding of the firm. So, that's great, that you've got confirmation of payee. A couple of things to mention. So, fraudsters these days are very sophisticated. If they can clone, kind of firm's website and intercept emails, they may potentially be able to open a bank account with a similar name to the firm. But also it's the real-time data from the SRA. So it's the fuller picture of being aware of any scam alerts associated to the firm or any solicitors practice in there, anything that you need to be aware of in relation to the trading status of the firm as well. So I hope that answers the question.
Lovely, thank you. We've also had a question regarding the costs of this.
Yeah, so that's something that we can, we can get one of the InfoTrack team to cover afterwards, if that's okay. The cost is cost neutral, so it is charged back to the client as a disbursement, and we can obviously provide you with policy wording to enable you to update your internal risk registers and quotations. But I think that's something that InfoTrack would like to follow up with afterwards.
That's lovely. Thanks, Lindsay. We've had another question come through. What sources do you use to check the account details? We do not do a lot of property work, but account is more than 10 years open, but we frequently get calls from other solicitors to verify our details. How can we resolve this?
So it's a database of, so Lawyer Checker is set up with algorithms. That's commercially sensitive. We're not able to, to kind of divulge too much information into that. But with our algorithm, what I can say is that it's based on search history, and obviously having the relationships with the firms, if they do need to amend their bank details.
Lovely, thank you. We've had a couple of questions. So we've had, how do you define infrequent? And then we've had a question, how do we resolve an infrequent result?
So how we would define as infrequent as a firm that's not searched against on a regular basis. There could be a legitimate reason for that. It could be maybe a firm that, that doesn't do a lot in conveyancing. But it's based on a track record and the frequency of firms searching against those particular details. When it comes to if you were to receive an infrequent result, I would kind of hang fire and wait for the further research report to come through. That's obviously then for you to review. If you require any further investigation after that, we provide you with as much evidence as we can, but it's ultimately your decision on how you act moving forward.
Thank you. We've also had a follow-up question. How is this different from Lawyer Checker on LMS?
Lawyer Checker is separate to LMS. I think with LMS, it is a snapshot in time. I would say that the main differentiator is that our data is real time. I may be inaccurate with that, but my understanding is that the LMS data is a little bit different. And ours is kind of real-time data with the integrations of the SRA and also Credit Safe as well.
Thank you. We've had another question come in. If a firm deals predominantly with commercial conveyancing as opposed to residential, would it show up as unknown in a rare residential transaction?
It really does depend. The reason that it would come back as unknown is if we've never seen those details previously. So it may come back as an infrequent, if those details have been searched against previously. However, with the further research report, as I mentioned, you would see the land registry data. So you'd be able to see that that's the reason that it's come back as infrequent.
Thanks, Lindsay. I'll just give it a few more moments and see if we've got any other questions coming through in the Q&A tab. Right, I think that is all the questions for now. So I think we will finish the session here. I would like to say a big thank you to Lindsay for her time today. I hope you found this session informative. If you do have any other questions about anything you've learned today, or questions in relation to the Lawyer Checker offering and how it works through the InfoTrack platform, please get in touch with your account manager who will be able to assist you. All that's left to say is thank you so much for joining us today. Have a lovely rest of your day and a lovely rest of your week. Thank you.